Hi everyone, I'm Mirala Ciobanu, lead editor with the Paypers, and I'm thrilled to welcome Anthony Day, blockchain leader, to talk about the role of blockchain and zero knowledge proofs in the financial industry. Hi Anthony, it's good to have you here today.
Hey, thank you so much for the kind invitation. Big fan of the papers, and thank you so much for your curiosity and wanting to know more about Midnight.
Yeah, great. So, as most of you know, in 2025, the Papers is diving deep into Web3 payments, aiming to bridge the gap between traditional finance and the Web3 ecosystem. Our goal is to help businesses and consumers confidently use traditional assets and blockchain technologies for faster, more efficient, and secure transactions, both locally and globally. We saw great interest in digital assets, and traditional financial institutions are becoming more open to new ways of moving money and data. But the big question is, how do we do this while minimizing data exposure? And to answer this question, yeah, we invited Anthony today, who is going to share the benefits of applying blockchain and distributed ledger technologies in our industries. Most of you probably know Anthony from his podcast, Blockchain Won't Save the World. This is how I got to meet him virtually, and today also in a virtual setup, but more having a close conversation. However, he held key leadership positions at Deloitte, IBM, and Parity Technology. And currently, he's the head of strategy and marketing at Midnight. You have to excuse me. I'm very nervous and excited about this interview, and many ideas pop into my mind, and I want to share them all and also to ask many things. But first, I noticed from your biography that you have a very long history with blockchain, and you wear many hats in this space. Can you share a bit about your experience working with blockchain, and how did you get attracted into this space?
Sure. Thank you so much for the kind introduction. I found my way into blockchain technology through working in digital transformation and innovation at that time with Deloitte. The large majority of my career started in change projects, transformation projects around marketing, around organizational design, and then increasingly into technology. So large kind of turnkey projects, including payments, core banking transformations, building customer wallets, payments propositions for different governments or national payments entities. I spent a lot of my time building digital products and innovative products that could help improve customer experience. Fast forward till about 2016, and we start seeing the implications of distributed ledger technology, Hyperledger Fabric, Ethereum on regular industries. We've gone a few years past the Bitcoin digital gold, digital asset story into actually this is infrastructure that could change the way we build applications or the way that we wire industries. And at that time, Deloitte had a blockchain delivery center in Ireland where I was working. And I kindly got the invitation to be the COO for that group. So looking after business development, operations, delivery, everything that wasn't the role of the CTO. Antonio Sonatore, who's now the CTO at VChain and doing amazing work there. That was 2017. And I approached blockchain there with the same interest in terms of how does this transform existing businesses? How does this enable humans and businesses to do the jobs that they were always trying to do, but with different benefits or different features? And so when we think about blockchain, we think about immutability. So records that can't be tampered with. We think about transparency, records that are visible to everybody involved. Now you've got different flavors of inverted commas blockchains, some of those fully public like Ethereum, some of those more private and permissioned, more DLTs than blockchains in that particular case, but that creates a shared source of the truth with some programmability around privacy and obfuscation. And you have other aspects like the creation of tokens, the ability to have open source networks, shared incentives. These are really powerful tools that allow us to build applications and infrastructure differently than software as a service or cloud or some of the other technologies we use to build applications today. And my interest remains very much the same. Right? I'm interested to see the technology succeed. I'm interested to see decentralized governance, decentralized applications, unstoppable apps, privacy preserving apps help people to do the jobs they've always tried to do. We haven't got there yet. And there's a few reasons for why. And I suspect we might get to talk about that in this conversation. But also touches very clearly onto payments. Stable coins as a domain, we've seen something like $200 billion of value embedded into stable coins at this particular point in time. We've already established some of the core primitives for how we do digital transformation with blockchain. As I said, we haven't got there just yet in terms of widespread adoption.
Yeah, so you mentioned a lot of benefits that blockchain brings to not necessarily financial institutions. So it can bring to the whole ecosystem, like immutability, transparency, yeah, security. But now narrowing down the discussion to financial services, and most probably you've been engaged in working with financial services with their products, and you brought blockchain enabled platforms. If you are to think of a specific project in this industry, what does it mean in practice? Can you describe a bit the pace, the exact technology, the teams, how people cooperate? How does it work?
Yes, of course. So I think you've got probably a separation between the decentralized world of applications, decentralized finance, and traditional finance, which is more centralized, making use of decentralized technology. So decentralized finance probably has the equivalent TVL, or assets under management, of probably just one large bank at this point in time. But what decentralized finance has shown is that you can create non-bank decentralized entities that can build applications that offer lending, borrowing, yield-bearing instruments that people can earn rewards from, and people can earn interest or can conduct many of the similar activities or consume similar products than you would have in regulated financial services today, albeit less regulated. I don't want to say not regulated, because depending on which jurisdiction you look at, Hong Kong, Singapore, Switzerland, and hopefully soon in the United States, you do see varying levels of regulation for digital assets. So we are maybe under-regulated, but not unregulated at this point in time. That's what the decentralized world has brought. If you look at traditional finance and the way they are looking at decentralized technology, use of blockchains, single source of the truth often tends to be the place where things start, followed then by the ability for assets to be recognized across borders in real time, the ability to move collateral around the world into different jurisdictions and to different opportunities very quickly. You've seen some basic initial propositions like the tokenization of cash or tokenization of deposits, which means that a multinational can have its cash assets movable or recognizable on different ledgers in different banks for different legal with different financial services legal entities around the world, which increases the speed to market. Why is that a good thing? Banks, companies with large treasuries, investors can move their funds into locations to make use of market opportunities much faster. Right? You've looked at several projects, or we've seen several projects looking at cross-border payments. Right? Again, in most cases, the existing cross-border infrastructure between banks, settlement, time to finality or time to completion of transactions is multiple days, includes costs, includes, in some cases, inefficient processes that just have been organically evolved over time, in some cases with the impact of regulation. That just means things are slow and expensive. And in many cases, the ability to take opportunities in the markets 24/7, borderless, real time is super useful. And so a ledger between parties that is trustless, right, that doesn't require multiple parties to verify externally, that is verifiable computationally, allows us to do those things faster. And as regulation evolves, you're seeing an increasing number of banks, the likes of JP Morgan, the likes of Citi, Swift, increasingly starting to step into this space as well, starting to create their own propositions that look a little bit like existing banking services and offers, but using decentralized technology because the rails are better, or they have a business case that is more positive than the way things are done today. Maybe hopefully some useful, interesting examples to get us started.
Yeah, so now we have new modern rails that in a way replicate in a faster, cheaper way what it used to be the traditional rails of moving money. And I'm curious, are these rails, because with the traditional ones, we kind of try and solve the interoperability part, though again, it's slow and it's expensive. With the new ones, have we solved the interoperability part, or they are creating like walled gardens, the JP Morgans and all the other banks? What do you think?
So what I think you'll see over the course of time is global protocols, the likes of Bitcoin, Ethereum, Cardano, take your pick, global protocols that are universal and not siloed, that are likely to work alongside um, maybe industry specific, national specific, currency specific products. And you might see settlement or you might see exchanges exist between those things. Again, those can happen computationally in real time. Privacy we'll talk about later. But you can still create a limited proposition or a specific protocol that can then be interoperable with other protocols. Obviously, it takes some engineering effort, it takes some security and user experience research in addition to that to make sure that those things are functional. But we now have demonstrated we can have secure, global, open source protocols that we can transfer data, money, value, verify identity, verify computation, whatever, verify settlement, verify finality. This is infrastructure we have now, and that doesn't go away. So the reality is probably we haven't seen universally interoperable bridges and products and applications now. That's not because the infrastructure doesn't exist. That's just because we haven't reached the level of maturity and scale around the product yet. But there's nothing getting in the way that I can see today.
Okay, so now we reach the maturity and scale of those infrastructure, and we also get to talk about your favorite topic, privacy, because when you reach this level, that means that data indeed flows everywhere, and this data needs to be private, secure, protected, and whatnot. And all the time, the discussions around data, yeah, sometimes they are overestimated or underestimated. How do you see data protection, and what does data protection, good data protection, look like? Data
Thank you for
in
framing that
privacy.
question appropriately. That's a nice way of framing, because what does good look like, I think, is an important part of this. Rather than saying, what are we doing today? How do we make it better? What does good look like? I'll start with a second point here, because I think what I would love to see in certain parts of the internet or in the way that organizations and individuals interact with each other is that we never see sensitive data leave the perimeters, systems, and devices of the people who own that data. Right? The reason we get into trouble is because sensitive data leaks to other parties or makes its way onto databases, entirely honestly and naturally. But that data becomes available, becomes replicated, becomes visible and potentially accessible to others through the technology infrastructure we provide. And the more data people can correlate, the more people can get access to, the more information about you somebody can get hold of, you being an organization or being an individual, the more likely you can see phishing scams, the more likely you can see Sybil attacks, the more likely you can see people taking out mortgages in the names of other people, right? At a basic, simple level. So the more sensitive data we have out there on servers, on the internet, the more likelihood of bad things happening. And companies don't want that data either, right? For the most part, they just want to interact with you. They want to provide you a service. They want to sell you goods. They don't necessarily want the stress of having to manage, maintain, govern, operate, secure, backup, audit all of their technology infrastructure, databases, CRM, historical records, because that's painful, costly, expensive, and that money might otherwise be put towards innovation or product enhancements. We have normalized the sharing of sensitive data in exchange for goods and services today because we haven't had a better alternative. And I believe that now we're in an era where the ability to provide verifiable data, proofs of data, that we can verify with computation without sending sensitive data between two parties that don't know each other, this is possible today. send proofs, not sensitive data. Send proofs of data, essentially. This is the most simplistic way we can break it down. I'm happy to then go a level deeper on the technology that sits underneath that. But what we're able to do with a mix of digital identity, with signatures, signature data, and cryptography is prove that I hold an identity credential, or that I have a balance of a certain amount of money, or that I have a nationality of a certain country, or that I live in a certain area. We can verify these things with computation, but rather than me sending you my address details, rather than me sending a copy of my passport, rather than me showing you a proof of funds and a PDF document, the application can compute those things and share a proof with a smart contract or with the originating source application, and we can post that proof. That's slightly different to the way blockchains and smart contracts operate today. In some cases, we're using zero knowledge proofs to batch transactions and obfuscate some of the data, which is entirely useful. But for the most part, if you take vanilla public Ethereum or vanilla public blockchains in general, typically you'll see the transaction data, the two parties, transaction metadata, the time, the amount, the assets that were exchanged, and potentially some other data that may be appended, whether it be a blob, whether it be a hash, whether it be something else. You're starting to see both transaction data and metadata being logged onto a blockchain, publicly viewable by anyone, anytime, forever. And we won't get into the issue of that data that is encrypted potentially being unencrypted by quantum computers, because that gets down a level of speculation as to when and how bad that frankly is unhelpful at this point in time. But that transaction data and metadata is publicly visible. Wallet addresses can be doxed. Most of the senior leaders in Web3 today have one or more of their wallets doxed, and so people know and regularly send assets to those wallets, right? Whether you like it or not, this is a thing that happens. And between parties, if there's a conflict, or if just through phishing or through disclosure of some kind, somebody gets to find out which is the JP Morgan wallet, or which is the Walmart wallet, or whichever one it might be. You can have sophisticated schemes to kind of create multiple wallets and wallets of wallets and trees of wallets. But ultimately, if you dox the organization or the wallet, very quickly you start being able to piece parts of that data trail, their regular transactions, their counterparties together. And with very little effort, all of that transparent data can be turned into market intelligence. If that relates to order books, or if that relates to market makers, or if that relates to intents, you can start identifying what people want to do before they do it. And in an open, transparent market where everything is visible and decentralized, that's dangerous, because then bots can front run and you end up ruining the opportunity of creating these wonderful decentralized markets. So there's a lot of risk in that. If we continue down that road, we're going to proliferate the amount of this sensitive data and metadata that exists on chain, and ultimately we lose the ability to protect people's and organizations' privacy. And from a personal experience perspective, since 2017, I've been talking about the opportunity of decentralized applications and smart contracts to Fortune 500 companies, to some of the largest financial institutions, to consumer goods companies, to governments. And they get through the list of smart contracts, automation, always on, low cost of maintaining application infrastructure, it's tamper resistant, open source, all of these things. I was like, yeah, that sounds really good. I like the sound of that. That sounds great. Shared incentives, brilliant. So we get people developing around our ideas and our projects. And then you get to and the data is transparent and public and on chain forever. And the guys are like, no, can't go there. Can't do that. That's not a risk that we're prepared to take. And this, to me, is the last hurdle, the last challenge we have to overcome to enable that more widespread adoption of decentralized applications or organizations interacting, communicating, and transacting on chain. We have the technology to do that today. We just have yet to help people understand the opportunity and make more use of that technology.
Yeah, but the benefit seems so obvious. Why do people say no to this type of decentralized application of?
So up until now, the issue is that having data and metadata on chain that's transparent to everybody is a risk, that they're not happy having their transaction metadata be public. Understandably, right? You don't put your HR records on a blockchain. You don't put your budgets and your annual spend on a blockchain. These are private matters. These are private matters for enterprises. These are private matters for companies. This is intellectual property in many cases for organizations. You don't let your competitors know who you're trading with. And so that's the barrier to conducting more trade and activity on chain. What we need to do to get past that is to enable people to still use decentralized applications while preserving their privacy, while shielding that data and metadata, while transacting on chain. How we do that, or a way that we can do that, is with creating zero knowledge proofs, creating proofs of data, creating proofs of activity, such that we can interact with the apps on chain without actually passing data or without committing data if we don't have to. Now, the additional challenge on top of that is, well, if we have everything private all the time, we cannot disclose to regulators or auditors what we've done. If everything's in a black box, nobody knows what's happened, and we're not going to be able to comply with regulation. So another important feature, and something that Midnight has innovated on, is the idea of selective disclosure, where you can provide, or the owner of the data can provide access to third parties, again, whether those be regulators, law enforcement, counterparties, auditors, whoever it might be, the ability to share the data on your private state with third parties, in addition to be able to send proofs to the smart contract so that you could be compliant. If you're doing all of your activity fully private all of the time, you cannot be. We've seen regulators' responses to applications like Tornado Cash, which were basically dark pools or fully private decentralized exchanges. These are not regulatory compliant. We're not trying to have people avoid regulatory compliance. The financial services and payments industries today, these are regulated organizations. These are regulated industries. We do not intend to circumvent regulation. We welcome it. The challenge for decentralized applications is maintaining privacy, but also allowing for compliance. And that's where zero knowledge technology with selective disclosure becomes hugely powerful for the next iteration of financial services.
Yeah. And if we think at some specific use cases for financial institutions for zero knowledge proofs and selective disclosures, what would those be? Just, some highlights.
All of them. Literally all of them. Every single decentralized application, every single identity verification, every single KYC you choose to do on chain,
exactly.
every single stable coin transaction, every single movement of data, value, or identity verification that might happen on chain, whether it's payments, whether it's capital markets, real world asset transactions, intellectual property, gambling, gaming, take your pick. Anything that happens through a decentralized application today, providing the system is performant, could, and to some extent should, be making use of zero knowledge proofs.
Yeah. And what do you think? Will we be there, I don't know, in 5-10 years?
I want to see us be there by the end of the year. But maybe that's a little too aggressive. Midnight Mainnet's coming later this year, but we have a really strong cadre of zero knowledge programs, zero knowledge protocols today in the world. Midnight is one of them. We've had lots of experience of being able to develop applications with that. I think some of the challenges we've seen so far is that zero knowledge is seen as the most complex cryptography you can have. And frankly, blockchains by themselves, if you get to a cryptographic level, oftentimes people are like, oh, that's too complicated. That's megamind stuff. It's not for me. And generally speaking, Web3 as an industry has not made its technology particularly addressable to pre-blockchain industries. And we have a marketing problem in that particular regard. With zero knowledge, what we need to be able to do is make the technology accessible to people through programming languages that they're able to code with today. Midnight uses TypeScript and JavaScript, so a variation on that, a reduced version of TypeScript. So those people who are used to programming almost basic websites can make use of zero knowledge proofs. We're working with organizations like OpenZeppelin, and we've created our own libraries, so common primitives, common building blocks of applications are readily available for developers to make use of. We try to talk in use cases, not in cryptography. There are a number of really important features around the way Midnight is engineered, but if you lead with that, people will be like, wow, that sounds really, really exciting and really technical. I don't know what to do with this. And so from a communications perspective, we need to start talking more about use cases, demonstrating applications, using examples. The Unshielded podcast, which sits within the Midnight stable, is specifically designed to do that, where we showcase in every episode somebody building something or somebody demonstrating a use of code or our partners demonstrating use of Midnight's technology for a particular use case, so people could see, oh, it's really just 5 lines of code and you plug it and then you have an application working. Oh, all right then. That's less difficult than I thought it would be. And so, like it or not, technology in the world, particularly if you look at AI and quantum, is not going to get less sophisticated. It will never be less sophisticated than it is today. The reality is we need to try and find a suitable interface into pre-blockchain industries or pre-blockchain organizations such that they can consume this technology in an easy way. A big part of that's also going to be software as a service, infrastructure as a service, being able to provide decentralized applications that can be used with APIs, being able to back into existing core banking systems or payments infrastructure in a certain way. We don't have to bring Web 2 to Web 3. The point is we need to take Web 3 technology and make it consumable, meet the users and customers of that technology where they are, not try and Bitcoin orange pill all of them and have them become degenerates overnight. That's not going to happen, and that's not the way you do digital transformation.
Yeah, you mentioned a lot about how to help people more on technical side, developers, how to integrate blockchains and all these Web3 concepts. But for traditional payments players, what books, I don't know, what courses, what podcasts would you recommend for them to listen to be more educated into these topics and to have a broad perspective of what exactly this technology mean?
So I would start from a Midnight perspective. Okay, I'm a little bit biased, but starting with the Unshielded podcast. Unshielded takes you through the basic concepts of decentralized privacy and why it matters.
Okay.
In what is intended to be as jargon-free as possible. Right? We start with basic introductions to, like I said today, why proofs matter, why sharing proofs, not sensitive data, is a better architecture or a beneficial architecture compared to the way that we have constructed the internet today. Go to a few events, right? I mean, the nice thing is that there are zero knowledge conferences. The Zero Knowledge podcast hosted by Anna Rose is a great resource. It can get a little bit technical from time to time, so I wouldn't start with a 101 in that space, but once you've got the basic concepts, hearing about the different projects that are building different versions of zero knowledge technology, the ZK show is a really, really good one. And then, honestly speaking, going to a couple of projects' websites and going through the quick start guides. Again, Midnight, if you go to docs.midnight.network, you'll find a few quick start guides for basically setting up the infrastructure to be able to build an application. They say, okay, well, I'm going to try 1 or 2 of the example apps. I'm going to start building that as an explainer, what's involved here, the wallet, the identity, shielding and unshielding of assets. To somebody working in financial services, these concepts shouldn't be unfamiliar. There'll be a learning process around the decentralized terminology. There should be much less of a learning process around TypeScript and the language and the building for somebody who's technical. For somebody who's non-technical, I said it's just going to be a little bit of a journey of understanding the use case for decentralization. The good news here is that we've been talking about blockchain in finance since 2014, 15-ish. You know, the original Ethereum proposition of decentralize everything. The content still exists, the use cases still exist. We just haven't seen the widespread adoption of it yet. On a weekly basis, you'll see somebody from BlackRock or JP Morgan or Citi talking on a stage, going to Money 2020 and talking about decentralized applications and payments or stable coins. Right? The good news is there's never been more content around it. Trying to find something that's relevant to your use case, I think, is going to be the key. But with a small number of searches and a little bit of work, honestly, there's everything you need today.
Great. Thank you. And probably this interview is also going to be part of our listeners' way of getting into this topic. But
exactly.
Now,
watch this. Watching this will help you. So continue to watch this.
Yeah. Now, one last small thing, since we talked about our leadership, and many times they are interested in decentralized technologies, decentralized identity, and the European Digital Identity Wallet. I'm curious, has Midnight been involved in this project, in this European initiative, or what? How do you see it?
So I think I can observe the European Union taking on. There's a number of different things I think the European Union is doing well, some maybe less so well. But firstly, trying to lead on regulation with MiCA is a good start.
Okay.
From Midnight's perspective, we're going to launch mainnet this year as we look at releasing some of our white paper and token distribution descriptions and information to the public. We want to make sure we're compliant with MiCA, that we've got an ability to engage the European audience as much as the rest of the global audience. MiCA is not perfect. It's the first iteration. It hasn't had a lot of scrutiny or challenge under litigation yet, which is understandable because we're still 3 months into MiCA as a journey. But I've also participated in a number of roundtables that have been led by the European Union to gather feedback. And so from that perspective, the European Union is trying to make digital assets and the use of blockchain technology more accessible. From a digital identity perspective, recognizing that decentralized IDs are an important architecture and a privacy preserving architecture that are already being used, that are useful in exactly these use cases. Without identity, you don't really have blockchain transactions because every wallet needs to have an identity. Linking that identity to other things and doing so in a privacy preserving way, super important. And so again, seeing that the European Union recognizes decentralized ID is super important for us to be able to progress. Standards matter, right? If regulators identify standards, if they identify technology patterns, zero knowledge and the use of zero knowledge proofs or trusted execution environments or fully homomorphic encryption, these are complex technologies that we probably haven't seen called out explicitly in a lot of the existing regulation because it was written 1 or 2 years back and the technology has come to the fore in the last 2 years since. And it's going to take a little while for regulators and those who are approving the standards and architectures for what is allowed and what isn't allowed, or what is preferred and what isn't preferred. It'll take some time. But I think we're absolutely on the right path. I think whether Europe is leading or at least trying to remain on parity with the rest of the world, I think that's positive. We're going to see a lot of change in the US this year, I suspect. We're already seeing great progress in the likes of Hong Kong, Singapore, Switzerland, and a bunch of other jurisdictions on digital assets too. So let's not only consider that the world is just Europe or the United States. I'm a Brit with an Irish passport living in Portugal who's been to 100 odd countries in the world. I try to take as much of a global citizen view of these things as possible. And for anybody out there who's building or who's working on projects, also don't feel hampered by your current jurisdiction. There are very, very many places in the world, I forgot to mention the UAE, that's also aggressively building founder experience, as well as developer experience, as well as regulatory experience around the creation of decentralized finance or the creation of new products that make use of blockchain technology. We are going on the right path. There's a bunch of places where things are a bit clunky or not perfect today, but the momentum is there, the progress is there, and it has never been easier to set up and build and transform with blockchain technology today.
Yeah, I like the positive tone that we are ending our discussion, that it is inclusive, it covers the whole globe. And it has a positive perspective that we are going to get there. Thank you, Anthony, for today's discussion. And I look forward to continue discussing, maybe meeting at the end of the year to see what Midnight has been doing. Remember that you projected that by the end of the year, Midnight is going to be part of the payments infrastructures of banks.
There's going to be a lot to come. We're really excited. Thank you so much for giving the opportunity to share more about what we're doing, the outlook around zero knowledge and privacy preserving applications in Web3, in financial services, in payments. There's a huge amount of opportunity and it's just going to be a matter of time. So thank you so much again for the kind invitation.